Hey Matt, how's it going? This is just our next episode. I forget what number. I think we're on episode 23 of Going Live with Good Soil. It's been a fun 23 weeks so far, right?
I can't believe it's been that long. Actually, I think if you would have asked me how many times we've done this yesterday, I probably would have said I don't know, like 12 or 13. It's kind of
Yeah,
shocking to me how quickly time is going right now. But
yeah,
yeah, it's been fun to watch this grow and kind of see the community engagement. I've really enjoyed it.
yeah. And we're doing our best to try to make it consistent every Tuesday, even if I'm away or Matt's away. We're doing our best to try to keep it going with guest hosts and such. So hopefully we'll keep that record going of consecutive Tuesday live streams at the same time. Um, So yeah, just a just quick disclaimer. It was displayed on our YouTube live channel right now, but for everyone on Twitter Spaces listening, none of this is investment advice. We're not investment advisors. We're just kind of speaking our own thoughts and opinions on markets and stocks and such. Um, so yeah, we'll just dive right into it. I guess Matt and I, we haven't even caught up yet. We're just kind of open sourcing our discussions on this stuff. And the Elon, I mean, before we talk about macro markets, the Elon interview from last night. What did you have any thoughts on that? I mean, that was pretty interesting, right? I mean, I thought there was good questions. I thought the interviewer did a good job keeping things going, keeping Elon from. Sometimes Elon can go on and ramble for like 5 minutes on a question and give the same answer we've heard in other interviews almost for 5 minutes. But I think she did a good job of kind of progressing forward on new topics to try to cover a lot of things in the half hour. What did you think, man?
Yeah. I thought Joanna Stern, I think it was, she did a really really good job with the interview. I agree. And it's one of the rare instances when I, as someone with 5 kids and number 6 on the way, can feel like I'm doing something for the greater good instead of just being like a weird Catholic guy. So
Yeah,
it was kind of funny to hear him talk about the importance of having lots of children to fight population collapse. So, but
yeah,
there,
that
I
was
mean,
a
there were
big.
all sorts of
Yeah,
interesting tidbits. I think his views on kind of government were there was a good chunk of the interview that was spent on that, and I think he had some pretty interesting thoughts on that. I mean, basically just saying we need to retire a lot of the regulations and get rid of some red tape. He had, I would say, something of like a libertarian mindset, but not like an extreme version of it. So
yeah,
it was just interesting hearing what he said. What was your kind of takeaway or any interesting nuggets you took from
yeah.
that?
A couple nuggets. I mean, he seemed more frustrated about current political environment in the U.S. in particular than I've seen him in the past. He's at times he's always everyone's frustrated with politics at times, obviously, but he just seemed to kind of harp on it a little more so than I've seen in the past. So, it's something he's thinking about more. And I thought it was really interesting that he's sort of daring politicians to take the EV rebates away from the bill. Like I feel like he's like, delete the bill. It's kind of like the way I think of it is like, you ever write one of those like really long emails to someone for work or whatever? It's like a long email and you write it carefully, you spend a lot of time, and then you think about it. And you're like, oh, I'll just wait a little bit. And then you think about it, and then you end up just deleting it. You're like, I'm not going to even send it. But you spent like hours putting it together or something. I've done that a few times, and it sucks. But I feel like that's what he thinks the government should be doing. And on this bill, is just kind of take it out off the table. I mean, he's really concerned about the government spending, of course, and that's always been an issue as far back as I can remember with politics. But I mean, I guess it's just increasingly becoming a bigger issue, right?
Yeah, I mean, it's kind of taking that analogy, in the government's hands, it's kind of like there are, a group of, individuals who are employed to write your emails, and then, there's like one more person, one more email writer hired every year, and so like you can't ever
Yeah,
really get rid of them, and like they're
yeah,
gonna publish the email no matter what because they need to kind of like provide some value, and he's just saying no, like we need to delete the whole system. We like
yeah,
even sending the email is not a good idea, but spending money on all these people that are providing very little incremental value. And I think that he had a great quote, and I wish I could remember exactly what he said, but he said something to the effect of just the continuous introduction of new regulations will just ossify the economy.
yeah.
And
Oh,
I
he
thought that
said
was
he
just
said it was like what did he say? It would like clog the arteries of the economy or
mhm.
something like that. That was a quote about like more regulations, right? Something like that. It was good.
Yeah,
Um,
yeah, and it makes a lot of sense. I mean, I've seen a little bit of government regulation just in my time in energy, and to a lesser extent with what we're doing here at Good Soil, and it's like you got to avoid stepping on landmines all the time, and I think there's
Yeah.
little value provided by a lot of the stuff that you end up being required to do. So.
Yeah. Yeah. And the Cybertruck, you know, he iterated that as being the most like the best product they've done yet. That's really that's a pretty powerful statement, you know, from Elon. It's very exciting to kind of you know, as an investor, to know that their best product yet is just around the corner from being released. You know, it started out as like a pet project, and now it's like suddenly in Elon's mind, you know, their best product. So that's exciting as an investor to hear.
Yeah, he was talking about it as like a generational kind of landmark product. You know, I don't think he quite invoked the iPhone, but that was kind of the sense of like the gravity of the product that he was sort of invoking. And that to me was, you know, pretty impressive. I mean, he must be clearly he likes it, you know, just on a personal level. But I think, you know, 2 years ago, he had a much more kind of skeptical view of whether the market would like it or not. And now he seems way more upbeat and just like, this is going to be a very disruptive product. So yeah, I'm excited to see it. You know, I've got 21 on order, so I'm looking forward to it.
I followed your lead, and I ordered like 8 reservations, like a little bit after I saw your interview with Dave Lee back then on that. I was like, "What? Matt's gonna do it before me. I'm gonna order 28 too." And I ordered a bunch, and sort of like a call option for the if the self-driving is ready by then, you know, it might be very well worth it to take delivery of as many as you can as soon as you can, to kind of have those fleets going around, you know, printing money for you, you know, providing a service to all kinds of folks for, you know, pennies on the dollar of what, you know, any other, you know, rented car or rented truck would cost.
Yeah, I think whenever autonomy does happen, I think there will be a huge kind of first mover advantage, and whatever fleet owners out there, you know, can charge higher prices while they still can, kind of before there's market saturation. I think that's going to be a really good economic situation to be in. So. Yeah, I don't know. I'm not trying to get my hopes up that that'll actually happen, but it seems like a reasonable probability, especially for given the fact that it's like a free option, a free call option on autonomy. Can't really beat that.
Another big
what did you think
takeaway.
about the moving that to like a quad, like a 4-motor? I was pretty surprised by that, because I thought they'd be using like the plaid technology. It sounds like they're kind of leapfrogging the plaid right away and just going to some 4-motor technology.
Yeah, I mean, I like the idea of the, you know, oh, you got 2 motors, I got 3. No, you got 3, I got 4 motors. Next, it's gonna be like, I got 5 motors, 1 for something else. I don't know. But like, I'm like, I don't really care about how many motors, to be honest. Like 2 motors is cool. Yeah, that's great. You know, I feel like more than 2 motors is like, I don't really, doesn't move the needle to me personally. I mean, it's cool to brag about maybe, but you know, that's one thing I don't put as much, you know, I don't put as much like, you know, excitement on that. I mean, it sounds kind of cool on paper, and probably works really well in the most extreme weather condition, you know, but it doesn't move the needle for me that much. What about you?
Yeah, I mean, it's kind of like you know, the whole razor blade industry, where it was like, you know, like the Gillette Mach-E came out, and then it's like, oh no, the Schick Quattro's got 4 blades, and then there was like, I think there was like a 5 or 6 blade version that came out eventually. And it's like, guys, like, you don't need all these blades. Like, it's just kind of like a bizarre marketing technique. The one thing that I do think could be interesting, though, you know, would be like the tank turn. That was something that Rivian had that apparently has been very difficult. I don't know if they really figured that out, but you know, with 4 motors, you could theoretically do that. So that could be something,
or whatever. Yeah,
crab walk, and presumably you could get slightly better traction control if you can kind of get each one of those, you know, wheels you know, spinning at just kind of the right amount to maximize the traction. So I mean, there could be some small benefits there, but I agree with you. Like on the whole, you're looking at what your plaid Model S does. Like, I don't think adding an extra motor to like shave a 1/4 second off that, or a 1/10 of a second is going to really move the needle. But there may be some small kind of performance, you know, improvements.
Yeah, I agree. But I thought another big takeaway from the discussion was when they asked about Tesla Bot, and Elon, you know, reiterated its seriousness, obviously, and I think rightly so. It should be a bigger part of the conversation of Tesla's future value. So he's very confident that Tesla will get it right. You know, it's just a matter of time, and whether that's in 1 or 2 years or 4 or 5 years, I think he's very confident that they will have a very well functioning Tesla bot that can, you know, do human labor. And to me, that's the real future of Tesla right there. I mean, that's the next iteration of value by Tesla to get it to, multi-trillion market cap potential, like with the current suite of products and technology. Yeah, maybe they can get to, maybe they can double or triple or quadruple from here potentially. But for them to really get to if they ever want to get to 10 trillion market cap plus, I think they need this Tesla bot to really be revolutionary, which I think it would be and will be. And I'm excited to learn more about that as time goes on.
Yeah, it's funny because so many people still don't really give Tesla credit for that. But if you listen carefully to what Elon says about it, he's thinking of it in like a very kind of product centric way. He's saying, we've got this suite of autonomy, capabilities that we've already built out, and there's just different applications that we could use it for. So we can build the bot, and we'll need to. You can just hear the gears clicking. He's like, we'll need some actuators and some custom sensors.
Yeah.
He's like building the product in his mind as he's
here. He
speaking.
knows
so
what it's going to take. Yeah.
He's like he's so in the details on this already. That's not like, he's not pumping it. He's not saying like, oh, it's gonna displace all the jobs, and we'll provide more value, and it's gonna make the stock go to the moon. Like, he's not saying any of that stuff. He's really focusing on the details on how they will execute on this product, and that's what I like to hear.
Yeah, I do too. I mean, any long-term, so many of us have made money in the recent past with Tesla's rise and such. But if you're intending to hold it long-term, which I hope most of us are, then the Tesla bot is the number one thing in my mind to keep an eye on. That's the thing that the market is not priced in whatsoever, has no idea how to price it in. And that's the real information advantage any long-term, retail investor can have on Tesla, is understanding what the market is not capable of pricing in at this time. So the Tesla bot to me is the main thing to focus on. And I retweeted some guy not long ago who's like a, Tesla bot, fanatic, and he does his own bot designs and stuff. And he's already doing like images of like what he thinks the Tesla bot might look like. And I think we'll see more of that in the next couple of years. I think you'll see, just like you have all kinds of Tesla energy specialists, you have full self-driving specialists on Tesla tweeting things. You follow people just for their full self-driving analysis. I think in a year or two, we'll have Tesla bot specialists, and you'll be following a group of people just who are focused on the Tesla bot capabilities. So, it's better to understand early that type of stuff, then you can use it to your advantage over time maybe. But yeah, I'm excited about the Tesla bot. I can't stop talking about it sometimes.
I'm probably more excited about autonomy in the near term. I mean, thinking about the implications. I mean, he even yesterday in the interview, he said something to the effect of, this will be solving autonomy will be like one of the most dramatic changes to like human civilization ever. He said something like that, and like that may sound a little flippant or like exaggerated, but I think if you really take a look at all the labor that would free up from people, just like spending time on the road, like that's drastic impact.
That's the most near-term thing.
So
yeah, that'll change things first. The Tesla bots after that, yeah. But the autonomy, I think a lot of us are already kind of starting to figure out, and yeah, I think we all are excited about that.
But I would argue it's not really in the stock yet. Like autonomy, maybe there's like a
little
10
bit
or
here and there,
25% probability of them succeeding on that. That's kind of baked in. But if they can solve that,
priced in a little bit of autonomy, but yeah, it's not baked in by most of Wall Street yet into the stock.
So that's what makes me so excited, though, is that you've got like this near-term 2 to 3 year kind of major catalyst for with autonomy, let alone just kind of continued execution on operations. And then right on the back of that, you'll have Tesla bot coming on. You'll have Tesla energy strengthening. You'll have all these other kind of applications and projects.
Once the autonomy, I was on the Dave Lee's channel Sunday night and talking, and I was thinking, I think Tesla's going to be the stock of all time, not just of our generation. It's going to be the stock of all time once the Tesla bot comes out, especially, but even maybe before that with autonomy, like you said, how game changing it's going to be for the entire transportation industry, and employment of lots of folks too, from truck drivers to taxi drivers, Uber drivers, delivery, robo kitchens will easily be able to give their food at cost-effective prices to anyone through like a DoorDash, automated services and such or whatever. So I think, it's a huge value creation. It's just, I don't see how Tesla's not going to become the stock of all time. I don't see how that's not going to happen at this point. And later this decade, everyone will have accepted that. So yeah, it's exciting. And what do you think about his comments on Neuralink? Just moving on to his other comments on the interview, Neuralink, that was exciting. I thought, like, really hopeful that he thinks people with like severed spines could be, could get walking functionality again naturally. I mean, that seems like he's hopeful.
Yeah. I wish I understood this stuff a little bit better. I mean, it sounds to me a little bit like cochlear implants, where the issue is not that your ears aren't capable of hearing. It's really kind of the connection between your ears and your brain. So to me, it kind of makes sense. Granted, I don't have a neuromuscular like background by any stretch, but it does kind of make sense to me that if your kind of wiring in your brain is the issue, and that my understanding is with a lot of spinal cord injuries, that's kind of the case. Is just that you can't get the signal from the brain down to the kind of extremities that you're trying to move, that you could solve that kind of with some sort of hardware implant that could supplement or take over the kind of sending those signals. So
yeah.
I mean, it's crazy to think that's even possible, and potentially, going in.
And how does Elon even put all this stuff together? From rockets to like Tesla to batteries, like autonomy, full self-driving, neural networks, to now like freaking human biology. Like, what the heck? Like, how does he understand all this stuff to this level of degree? Like, this is such an incredible thing. Like, I don't, it's just really, it dumbfounds me. Like, how does one person grasp all of these incredibly complex things in such a way that he's able to do things that no one else dreamed as possible? It's really incredible.
Like the crazy, like, so he's like a polymath, right? He's got all these areas of expertise, but you think of like most polymaths, like Ben Franklin or whatever, like they kind of had a lot of hobbies that they kind of pursued, but he's like he's creating businesses for each one of these and driving results and kind of sticking with them and putting in the work to like simultaneously launch all these different things. So I mean, it's just absolutely incredible that one person has like the mental capability, just the mental horsepower to tackle these different things, and the interest to do it, and like the motivation and the tolerance for pain to just stick with it and to work 90 hours a week for 7 days or
7 days a week,
7 days a week,
100 hours a week, whatever,
100 hours a week for like 2 decades or more. Like, that's like, there's never been a person like that to my knowledge. I can't think of like a comparable person that has all those attributes.
And I think what's most underappreciated about it is he's not just like a polymath, like on all the stuff he's hobbies on, like Ben Franklin, or whatever, but he's also figured out how to be an incredible attractor of talent. Like, he's figured out how to delegate and marshal those resources unlike anyone else. Like, he understands the big picture of how to attract the right talent for each of those things, and then how to delegate and marshal. He can't do it all himself, obviously, right? He can't even, he's doing as much as he can himself, but he's got to figure out how to, allocate the resources or allocate the human capital in the right way and attract the best human capital at the same time. And he's figured that out, as well as anyone. That's arguably one of the hardest things in my mind. Like, I've done well at my previous jobs, and to a point where they made me like managers. And that's like the hardest thing, is to like try to manage people. Like, I don't know, but Elon seems to figure that out and do it incredibly efficiently. Some people hate him, I guess, that work for him, but maybe those people just don't fit for his businesses and he gets rid of them quickly, or whatever. He just knows how to marshal the resources better than anyone else as well. That's like a whole nother polymath category in a way.
And the funny thing is, like, I don't think you can be as successful as he is, or as Jeff Bezos is, and not like have some people hate you or have strong opinions about you. Like, that's just going to come with the territory. But it's kind of surprising to me that he is as humble as he is, and just like, I wouldn't say normal, but he's like not as much of a jerk as you'd think that he might be, or like they were talking about his sense of humor last night on this interview, and like he still remains in touch with his humanity, kind of despite all this stuff that he's accomplished, and that's that's another just kind of remarkable component that that doesn't necessarily need to be a part of the mix, but it still is. So makes me like him even more.
And the last thing on the talk last night before we kind of go into our general macro market, outline of stuff, is I thought he was expressed some concern about Starship, like some serious concern, and that's the most concern I've heard him express, verbal. I think he put out a tweet not long ago about like concern about the Raptor engines, but for him to talk, vocally on an interview about his concern with Starship, it seems like it's a really tough problem, and he sort of has his doubts, and it's normal to have doubts. He's very honest about this stuff, but he's had doubts about Tesla in the beginning, or even landing rockets in the beginning. He accomplished all that stuff, so it doesn't mean he's not going to accomplish it. But I haven't heard him express this level of doubt on Starship before. Have you?
No. I mean, it was helpful for me to hear that, because I think there's a tendency to just given his track record, to give him the benefit of the doubt and say, oh yeah, they'll solve, the Raptor production engine. They'll solve like the reentry heat shield issues that they need to solve. They'll solve autonomy, like just because he solved all these other things that he said he was going to do. But hearing him talk about just how difficult these problems are is I think a really good just reminder that it's not a given that any problem he tackles will be solved, especially not on the time frame that he initially promised. So I thought that was a good just kind of reminder. We can't give him like 100% execution, just like make it a foregone conclusion that they'll execute. I think it's important for us to kind of like stay up to date on the details and soberly evaluate what are the issues that they have right now, and are any of them kind of fatal to the program.
Yeah. So yeah, good. So let's move on to kind of our macro market analysis real quick. We're on Twitter Spaces and YouTube Live at the same time. So on Twitter Spaces, I see some people have requested to chat. We can't interact verbally on Twitter Spaces because we're on YouTube Live at the same time. And so if you have questions you want us to answer, just put them in the Twitter thread from Good Soil Invest that they tweeted, and we have Alec behind the scenes kind of queuing up questions for the last 20 minutes or so of our chat we'll go over. So anyway, macro markets, I mean, what a rebound today. I mean, I think we were all worried at the start. The first week of December or last week was really rough, and yesterday was kind of rough, and today it seems like there's a significant rebound in the growth stocks in particular. What do you think this is going on here, Matt? What are your thoughts?
Yeah. I mean, it seemed like such an overreaction last week to or gosh, what that was that 2 weeks ago now on Thanksgiving with
the Omicron on Friday.
Yeah. I mean, that was like that kind of seemed to be the event that kind of kicked this whole, I don't know, tech wreck is maybe too strong or too overused of a name, but the whole kind of consolidation in tech and kind of general market jitters on top of some of the Fed issues going on. So to me, that seemed a little bit overblown. I mean, there was like really nothing known about this variant, and so it seemed like there was just a strong overreaction to that bit of news, and it just kind of carried forward for the next week and a half, 2 weeks. So yeah, I think we were kind of due for a rebound after that first week that we'd had, but I think it remains to be seen whether you kind of continue to grow from here, or if these concerns that we saw kind of pop up in the market in the last week and a half, 2 weeks will continue throughout the rest of December. So I'm not sure which way it'll go. Do you have a thought on kind of market sentiment right now?
It could go either way. I mean, I think we're still in the bull market. I don't see sudden bear market coming into play here. I mean, I think people rotate out of growth stocks into more value stocks sometimes, and then over time, people kind of slowly creep out of value stocks back to growth stocks as there's no macro headwinds on interest rates or tapering by the Fed or whatever. Any new news on that? I mean, there was new news on that, which caused, I think, a little bit of a risk-off rotation, that hurt, Cathie Wood, ARK Invest stocks, which is like the same sandbox of stocks we play in, obviously. But, if you looked at the S&P 500, that the market didn't really get hurt too badly. I think it was up on certain days when the growth stocks were down and such. So, that seems to be what happens a lot is, people get scared out of growth stocks, and then they come back over time. And then every once in a while, they get a big scare to get out of growth stocks. They come back over time. And I think that's going to keep happening. It just seems to be a pattern. And, when the whole market gets scared, like 3 or 5%, S&P 500 gets, drops on, Omicron variant concerns or whatever, then the growth stocks take a 10 or 20 or 30% hit sometimes, But then on a bull market, when the S&P and NASDAQ are up 5%, maybe the growth stocks are up 50%, it's almost like a different market. It's almost like there should be a new index. I feel like the ARK Invest is like a proxy for it, but I feel like there should be almost like an index just for like the real growth, not the meme stocks, but the growth, the growth stocks, I don't know how we'd have to categorize it, but we have a guy we're interviewing, Wes Gray, from Alpha Architect, and they're big on something called factor investing. It's a very quantitative style. We should write that question down. I'll write it down and ask them, like, what's a good way to quantify growth stocks? They have like a momentum ETF, and we'll dive into how they come up with that. But yeah, it's a whole different market, the growth stocks, and we'll see what happens. But I think they're kind of back off to the races right now, today at least. We'll see.
Yeah, like I've been trying to listen to a lot of different voices, people like, Kathy Wood, obviously, in her view, she's got very strong opinions. But, like Chamath and a lot of the other folks on like the All In podcast are basically saying, growth is overvalued. And so I'm trying to, keep an open mind with them and, I'll probably listen to 7 or 8 different macro market commentators who have different views. And I think where I'm landing at least is a lot of folks I think are kind of looking at this as sector rotation. We have like rotation out of quote unquote high risk stocks like growth stocks that in the sandbox that we talk about, and into kind of safe plays like industrials and consumer cyclical or whatever. And I think that's kind of historically what you've seen. But the more I think about it, I don't think that's necessarily the right framework for the next 5 to 10 years. Just because, as we've said many times on this channel, I think there's such a huge amount of disruption coming that the legacy players that are, have more reasonable valuations right now, maybe based off historical metrics, are going to have their lunch eaten by some of these emergent growth players. So while there may be some rotation in the short term or even in the medium term, I think in the long term, I'm more convinced than ever that a lot of these players are not well equipped to compete in the late 2020s. So I'm happy to kind of stay where we are right now. I'm sure it's going to continue to be volatile, but I think my long-term conviction is only growing the more I think about this stuff.
Yeah, I agree. Technology is accelerating. It's not steady, and this decade in particular, it's accelerating. And it's becoming very disruptive in certain spaces. So yeah, I think the market sometimes seems to a lot of analysts and such, they just try to use past, rates of change for the future. And I think the future is going to change much faster than a lot of market participants realize. So yeah, let's move on to, I guess, the Tesla price action or Rocket Lab, and then we'll talk a little bit more about Tesla, the stock. We talked about Elon's interview. We'll talk about the stock in a minute. But what Rocket Lab, one of our big names we talk about a lot, had a big, product unveiling or update of Neutron. What was your takeaway, Matt? I thought that was really a good video. If anyone hasn't seen it, it's like 8 minutes long. It's really interesting.
Yeah, it was really interesting. Much different from like a SpaceX or Tesla kind of product unveiling. In those you normally get Elon up there kind of talking a lot of technical details for half an hour or so. But this was just like a pre-prepared video presentation from Peter Beck, which had really slick graphics, and it was the production quality was really great. I'd highly recommend anyone check it out. But they started giving some technical details of their Neutron rocket, which is maybe the easiest way to think of it is like a competitor to Falcon 9. So it'll be like a medium launch vehicle. It had a lot of interesting features. So I took a couple notes here. A couple of the highlights. They chose carbon fiber rather than stainless steel. I think they actually kind of poked fun at SpaceX a little bit for choosing stainless steel, which it's like, all right, maybe if there's an I-bar that crashes into rockets on a regular basis, I think that's like a legitimate point that Peter Beck had there. But I think it was mostly just like for show. But so that was kind of interesting. The they've got this new Archimedes engine that they're going to be developing in-house, and they said that they should be having it on test stands next year. So that's a pretty rapid turnaround to get to that level of testing so quickly. But really, I think what they're doing with this overall is they've got a very low cost vehicle, at least if they're successful in kind of developing all this the way that they say, which is not kind of pushing the boundaries of engineering in any radical way. So like, I think we talked about this last week with the SpaceX Raptor engines and the difficulties they're having on that. Like if they can't solve that problem, like, the rocket
showstopper potentially.
That's it. Yeah. Like, so, maybe it takes them 5 years in a worst case scenario to like try to work on that, and they just can't solve it. And it's like, okay, well, they need to come up with a different solution then, or just Starship won't work. But here they're not really pushing the envelope of I would say the core technology in really drastic ways. So they're using what's called a closed loop or gas conversion cycle, I think it's called, which is not like the full flow stage combustion cycle that SpaceX is trying to develop, the very first one ever for the Raptor. And really they're trying to make that engine operate within a very comfortable level of capability. And they're not really pushing it to the extremes. They want it to actually return to the launch site. So
you get reused easily without having to fix it or whatnot. Yeah, he mentioned a few times he doesn't want to push those engines to the limit. He wants them to be reused frequently and such, and that they're sort of designing it that way. And like you said, the Raptor engines, they're sort of, seems like being used to the limit to get the most payload into space possible for the, so it's interesting. And the Rocket Lab carbon composite, there's some, they're 3D printing that in an efficient way. And they have, a special design for that carbon. And so, yeah, I'm excited to see the Neutron develop further and get produced in its first test flight. It just shows that, I think, isn't SpaceX kind of going to abandon? Isn't their plan to kind of abandon the Falcon and just move do everything on Starship going forward once they get it up and running?
Yeah, I mean, their thought is it's going to be so much. I think Elon said something like the marginal cost of the launch could be as low as like $1 or $2 million, because it would basically just be like refueling and that's it. So if that's the case, then it would actually be cheaper for them to launch Starship, even for smaller payloads, than it would be to use Falcon 9 and essentially lose the second stage of the engine, which is what they do right now, and that's also what Rocket Lab's going to do. They're not going to try to reuse the second stage. It's just too difficult to do that. So I think that may present a market opening for a lot of the small launch providers. Unless Starship is just so cheap and can fly like every 2 days, and SpaceX doesn't need every single one that it needs to do like Mars missions, which I think the likelihood of kind of all those things being true and there not being a market for Rocket Lab here is pretty small. So I think it does create a bit of market space for Rocket Lab to kind of handle a lot of these small sats and medium satellite launches. Yeah.
And like we've talked about before, the launch business is one segment, but it's going to become their smallest segment. Overall, like we discussed in that Space Roundtable discussion, that deep dive, the space services and the space applications, those segments of the business will be much bigger revenue than the launch business in time. And so that's what once you get the launch technology down, then it allows you to develop the space services and space applications businesses from there. So they're getting the launch business down, and SpaceX has got it down with the Falcon 9. And so far, those are the only two commercial, I guess ULA, they're very inefficient, expensive with their launches, but the only competitively priced, private companies launching rockets, really are Rocket Lab and SpaceX. And I think Astra had a successful launch, so we'll see where that goes. But those are very small launches for very small satellites. But there's a market for that too. So anyway, Tesla, the price action of Tesla. We're moving to Tesla stock now. We talked a lot about Elon's chat last night in the beginning, but the Tesla stock, he confirmed in the discussion he's not aware of anything for December 9th. We'll put those rumors to to bed now, I guess. To me, it seems it went from like a 5 to 20% chance to now like a 1 to 2% chance that maybe something just coincidentally happens or whatnot. But yeah, he wouldn't just lie openly to everyone if he knew something was going to happen.
Yeah, I think the likelihood of a stock split now on 12/9 is like zero, because
Yeah,
you can
I
imagine
agree.
if they did do something like that, there'd be SEC trouble.
Yeah.
So yeah,
Yeah.
I don't think that's going to happen anymore. Which
No, I don't
honestly,
think so
I'm
either.
fine with. It's like it's
Me
been a
too.
bit of a distraction, honestly.
It
So
has been. It has been. It has been one of those weird conspiracy theories that, some part of my mind just wants to grapple and take a hold of, but the bigger mind of mine was like, no, that's just conspiracy, Emmett. Don't buy into that. But part of it, hey, maybe it's true, but now I just know that there's nothing to it. So, but the stock is up, along with all the other stocks as we speak. It's 1045. I mean, still down from the 1200, around 1250 or 1200 highs we had not long ago, but Elon sold a big chunk of his shares already, and the majority of the shares apparently of what he's intended to sell. So I'm sure he'll still sell steadily, from time to time, 1 million shares on certain days, or 900 and whatever thousand shares. But yeah, I mean, I'm happy with the stock. I mean, I think we're staying convincingly above 1,000. To me, psychologically, 1,000 is very psychological. If we can stay above that going forward, and I think heading into the end of the year, if the macro markets don't have another, panic attack with growth stocks, then I can see Tesla rising continuously from here. That's just my opinion based on, the rumors of the production success they're having globally and especially in China. So we both think, I think there's a lot of potential upside for Tesla from here, right?
yeah, I mean, macro markets will kind of be what they are, but the thing that has so surprised me over the last year or so, and as I'm making projections for next year and beyond, continues to surprise me. It's just how strong the fundamentals are. So even though Tesla has gone up so drastically, since 2019, the fundamentals continue to strengthen such that it's really kind of backstopping the current valuation, with a reasonable kind of forward PE ratio. So I think we'll have to share my financial model maybe next week or the week after.
Yeah.
But kind of what we're seeing is like,
and just so people know, Matt's financial model has been spot on the last few quarters. I don't know if people saw his record, but I think you're very modest. But you were like a penny away from the earnings per share for like 2 quarters in a row. Like, you're number one of all the accounting polymaths out there. You're like number one on predicting their earnings per share. Maybe it's luck, who knows? But we'll
there's a
see
bit of
this
luck
next
in it for
quarter.
sure.
I'm sure there's luck. Yeah, there's some luck,
Yeah.
but given the luck, I mean, you can't even with that luck, you still have to be very good at it at least. So definitely give yourself credit. But anyway, go on. Sorry, we'll share your model prediction in a week or two.
Yeah, so we'll do that. But as we've been looking at it, internally, it's like, okay, we have to kind of raise our own estimates again, because the news out of China just continues to get so good. And then like you look at the gross margins that they posted in Q3, and you're like, well, they're going to be better than that in Q4. So I got to raise my projections in Q4 because they've got price increases, and they've got increased efficiency and operating leverage, and all these things continue to kind of compound quarter over quarter. And so then it's like you're raising your earnings estimates, by a pretty drastic amount when you carry that forward into 2022. And then just with like a reasonable forward PE ratio, you're like, well, Tesla stock probably has some room to go even above where it is right now at levels that people who aren't doing that level of work are calling frothy. So I just continue to be blown away by how good they are just on like the manufacturing side and how strong the demand is. So that gives me a lot of comfort that even at like $1 trillion valuation plus, there's still kind of plenty of room to go just on the core operations of the business.
Yeah, absolutely. And I think we've talked in the past that we think this quarter auto gross margin might be at a local high, right? Because they're going to start ramping up production of new factories from this point forward. So this is going to be like a really impressive quarter from gross margins, but we're not sure it's going to stay this high going forward for a while. It might take a while to come back up to this kind of level of gross margin that it could get to this quarter.
Mm-hmm. Yeah, I think that's true. It's at least on the hardware side. I mean, they may start recognizing some deferred revenue from full self-driving, and that may kind of offset or overtake some of the inefficiencies of Berlin and Austin as those start up. But yeah, I think if you look at this quarter, I mean, like Shanghai is just on fire. Fremont's at full capacity, well, almost at full capacity, because they keep increasing capacity at Fremont even, which is like mind-boggling to me how they're getting more out of there. So, you know, but I think you'll have probably the highest gross margin that we've seen yet from them in Q4, and that may reverse a little bit in future quarters, just as Berlin and Austin kind of, you know, struggle out of the gate.
Yeah. All right. Well, this next part of our discussion, I guess we'll just take Q&A, and there's people on Twitter Spaces and YouTube Live. Just a reminder that we can't take on people on Twitter Spaces because then YouTube Live doesn't get the recording of the people's voices and such. So we're just taking questions over a Q&A that people write in on YouTube Live or over Twitter on the Twitter thread for Good Soil Invest, where it was tweeted out originally. And we have Alec behind the scenes who will prompt the questions below, and Matt and I will go over them. So let's go over the questions here. First question from Brian Machado. Do you think Elon's opinion on not wanting EV subsidies will negatively affect the bill passing? He didn't seem to care about the benefits for other EV car companies. What do you think, Matt?
I don't think so. I mean, you know, I think there's so many kind of entrenched interests, you know, that, you know, have their fingers in this bill. You know, I think his opinion on it is not likely to carry weight among, you know, the senators and all the, you know, congressmen that are voting on this. So yeah, my sense is his comments are kind of his personal opinion, but I don't think that, you know, EV legislation is going to change on that, or the bill itself. But I don't know. What do you think?
I agree. I think it's sort of set in motion already. And if it was not going to pass anyway for some other reason, like Manchin and others just pushed it off and not doing it or whatever, if that was already going to happen, then now there's an excuse for news headlines to attribute it to Elon's comments in some way. But I still don't think there's a connection really either way. I think what Elon said is going to be ignored by the lawmakers. They're just worried about their constituents and the lobbyists. Yeah.
Sadly, I think Mary Barra has more pull with this sort of thing than Elon does.
For sure. Or the UAW workers. Yeah, they all have a lot more pull, unfortunately. So it's funny. Real quick, I saw Nassim Taleb. I follow him. You know, he's one of those really interesting viewpoints to follow on all things economy related. And he put out a really interesting quote recently, or there was a really interesting quote of his recently I saw on Twitter that said something to the effect of like, it's amazing how little money can be used to change economic policy through lobbying that affects such a huge part of the economy. So like the UAW, they don't have like enormous amount of money, but the amount of money they do have, they maximize it with the lobbying and can really change the policies. It's kind of crazy. It's interesting. Anyway, next question. That was just a side thought from Dave Wolf. How do you guys value the energy portion of Tesla? It seems that effect isn't really discussed all that much, but could have huge potential, especially with the CA and Texas efforts. Well, Matt, I'll let you handle that one.
Yeah. So, I did do like a discounted cash flow valuation of Tesla Energy earlier this year. I think I was coming up with something in the neighborhood of around like $400 per share right now. And the issue with Tesla Energy is just that so much of the value and kind of like the cash flow generation is going to be like in 2030 and beyond. So when you do a discounted cash flow method or you know, any sort of valuation to and then you have to discount that back to the present, it just naturally becomes a really small number, even if the numbers in 2030 or 2035 are quite large. So I think it's going to be like a really drastic, disruptive business that's going to create a lot of pain and a lot of like disruption for legacy utilities and for the existing energy landscape. We actually had a conversation yesterday with Eric from Worm Capital, which I think will be dropping in a couple of days, where we dive into this in a little bit more detail. So we'll be posting that, I think, later on this coming weekend, I think. So I'd encourage anyone to check that out. Once we drop that interview, we'll do a deep dive into that. But
it's a real deep dive. You guys really nerded out on that one. Way beyond my comprehension. You know, for anyone really wants to get into the details, you guys go really into it. It's really cool. Yeah.
Or if you just need to get some sleep and you want to, you know, if you're nerds like on a boring topic.
No, it was good. It was really good. That'll be like part 1 or part 2. We'll break it in 2 parts probably. But yeah. Anyway, go on.
Sorry. Yeah. No. So it's I do think it's going to be big, but it's not a near-term catalyst in my mind. It's going to be, one of these things. I think you wake up in 2030 and you say, oh wow, like Tesla's energy business is actually like pretty impactful now. So I think it's just going to take time, and from a DCF perspective, it doesn't really move the needle a whole lot.
Yeah. Next question from Pastor Jacob. Question: what criteria are you looking for in the charitable giving from your fund, and how might an organization get on your radar for a potential gift? Yes, it's a great question. Matt and I are actually, we've been talking about it more recently. Now that we hope that we'll have some performance fees for Q4 of this year, as long it's knock on wood, to dedicate towards charitable giving. So we have some interesting ideas. We're planning to make like maybe a 5-minute video just about it, me and Matt talking about the plan, but we'll do that in the next couple of weeks probably, and release it, and hopefully if the year doesn't end on a really sour note for all of our growth stocks, then we'll have some kind of performance fee to be able to donate half our fees to charity with after expenses. So yeah, it's exciting, and more news to come on that in the near future. Next question from Johnny Lou. Is there any concerns with Roblox being a centralized metaverse that is not interoperable with other metaverses? Roblox seems to not be embracing blockchain technology at all. I mean, I think the metaverse, it's one of those words that's just been overused in a lot of ways. The next evolution of the internet and this thing metaverse that we're calling the metaverse, I think interoperability is a big aspect. It's going to be very hard to interoperate among different platforms, in my opinion. Maybe there's some NFTs you can bring from one platform to another. I personally think Roblox is building sort of like it's been referred to as like this company town business model. This blogger, I think Larius Prime or something is his name, but he's written about extensively. It's really interesting. But they're building sort of like their own ecosystem, and it's everything's interoperable within their ecosystem, of course, right? But when you get outside of Roblox, it's a whole nother ballgame. And I think that's the case with a lot of platforms, whether it's Fortnite or Minecraft or Facebook's whatever they're trying to do with Oculus. It's very, I don't know how, you're going to make the entire internet and all the applications within that people are using it for interoperable. I just don't know how that's going to happen. I mean, I can see moving value interoperably with like crypto or Bitcoin. Yeah, that's one thing, but I don't see how like the functionality of it all can be interoperable, if that makes sense. I don't know, Matt, do you have any thoughts on that?
Yeah, I think like if that became a needed feature down the road, I think they could, kind of develop those bridges to other platforms. But we're so early on in this development right now that I don't think that's necessarily prudent. And they were talking a little bit about, somebody asked them about NFTs on the Investor Day a couple weeks back, and they were basically saying NFTs don't really make a whole lot of sense in their universe because it's like a JPEG, whereas they're going to have objects that are kind of you can interact with them more directly. So they were saying like they're gonna start selling things like pets and furniture and artwork and things like that you can actually use in a more robust way than like an NFT. So in my mind, that's like a natural kind of improvement on NFTs, which I think those need to be superseded. I think there's probably too much value being placed on NFTs right now, and there probably will be some blockchain technology. I think that makes sense in the metaverse, but I think it's probably too early to know what those are and which ones will be successful. And so I don't necessarily fault Roblox for not like being at the bleeding edge of some experiment that might not work out.
Yeah, like right now you buy Robux, their currency within their centralized, platform for US dollars or on your credit card or whatever. But I think they'll probably allow people to buy Robux with Dogecoin or Bitcoin in the future at some point. Like I don't see that being an issue. And so that in a way sort of makes the exchange of value more decentralized, although there's obviously some kind of minimal tax Roblox charges when you convert anything into Robux. They get a piece of that conversion cost. So But so, when you transfer Bitcoin to someone else, there's, costs obviously too. So anyway, that's a good question. That's something to think about and keep in the front of our mind as things evolve. Next one from Shekhar Rahaya. Hi, Emmet and Matt. Thank you for offering regular insights. Highly appreciated. In your opinion, what could explain that ARKX Space ETF includes stocks like Netflix, but not Rocket Lab? This is something Matt and I have talked about privately a number of times. We don't know. I saw Sam Corris comment on Neutron's unveiling last week. Seemed to be positive. So I know they're aware. It's not like they don't know who Rocket Lab is. So I know they're aware of Rocket Lab. But we're not sure. Maybe they're waiting for SpaceX to go public and Starlink, and they're going to, but I don't think they can go all in on a stock. I think they have that 10% guide. I would assume that there are other ETFs too. So I don't know why Rocket Lab is not a piece of their portfolio yet, but I assume at some point it will be. But time will tell. What do you think, Matt?
Yeah, it's a head scratcher to me. I think they've got like John Deere in there too. So there's like strange names that are not like pure play space exploration tech companies. So the fact that those are in there and Rocket Lab is not, I don't know. If I was an investor in that ETF, I would really kind of question why. You've got these non-pure play names, and then the biggest publicly traded pure play name is not in that space ETF. It doesn't make sense to me. So I'm not sure if they have like an opinion on Rocket Lab that they think it's overvalued or won't be a winner or something like that, or if maybe they just don't have a lot of expertise. I mean, they talk a lot about having kind of dedicated analysts with industry technology experience, and they've got really smart people with experience on like AI and genomics and a lot of like autonomous vehicles and all that these very kind of detailed knowledge sets. I don't think they have an analyst, and I could be wrong, but in listening to a lot of the calls that I've been on with them, I don't think they have an analyst who really understands the space industry well. So this one to me is a head scratcher. I mean, the whole ARKX ETF is a head scratcher to me, and I don't want to just dunk on them, but to me it seems like a mistake.
Yeah, I agree. And you know what? There's a great analysis. I just tweeted it right now about one of the guys we had on the Space Roundtable. From Terran Space Academy, Joseph, he did a great analysis on the Neutron rocket versus SpaceX and the Falcon 9 on his YouTube channel. I just tweeted it just 1 second ago. So if anyone wants to look at it, they can. It's like 10 or 15 minutes long, but it goes into great detail. Like, this is the type of analysis you'd think that, ARK Invest would be able to do to some degree and come up with their own conclusions, even if they don't like Neutron for whatever reason. Maybe they can publish why they don't favor Neutron and the Neutron rocket and Rocket Lab. That'd be interesting to see. I'd love to hear that view, either way.
Yeah, I would, but like Sam Corris's tweet on it was like, oh, it couldn't fit in the second stage of the Starship, but
or the Electron
could.
Yeah,
and I was like, what does that have to do with anything? Like, it was just like the most bizarre comment that had nothing to do with the capabilities of the rocket itself. So I don't know. My sense, and I could be wrong, but my sense that they just don't have the right knowledge of the industry to be making those calls. But
I think they're spread thin. They're great. Sam is incredible with what he's done with battery. I mean, you can only do, like you and I experienced, we can only dive deep on so many companies, and you have their all-star cast of, Kathy, Sam, Tasha Key, I'm missing a couple. It used to be James Wang, he's not there anymore. Brett Winton, obviously, and you have like the superstar cast that began ARK and made it so amazing. And they're spread so thin. They've hired so many other analysts in the last, year or two. It's to be determined, in my opinion, on all those other analysts and how formidable they actually are. Are they kind of young interns that are, can talk a good game, but I have my questions on a couple of them I've noted, but a couple of them seem interesting, but I've yet to form opinions on them, but they're definitely spread thin. And so, It's
But then
probably a lot of
why
work
have a
to.
space ETF then? Like,
Yeah,
like you
I
and I
think
are
they're.
not going to launch like a biomedicine, fund anytime soon
Yeah.
because it's not our area of expertise. So I don't know
Yeah, I don't
why.
know why they launched a space ETF. Maybe they had plans to hire some space analysts, but they haven't found the right ones yet. Yeah, I don't know. It still puzzles me a little bit. Yeah, yeah. So that's a good question. Maybe someone will ask them openly and they'll answer what they think about it. Who knows? From George Morris, do you think the time is coming for Tesla to produce some kind of marketing strategy? What steps should be taken if so, and if not, why not and when?
No,
I don't think so either.
no. I mean, when their backlog ceases to exist, or it gets to a month or two, then it probably makes sense to market so they can continue to get to 5 million, 10 million units. But right now they've got way more
Yeah.
demand than they can handle. So
I don't think they need
this is a
marketing.
non-issue to me.
Yeah, what's debatable is whether or not they need PR or not to kind of
Yeah.
deflect from some of the bad FUD coming out about their self-driving and such and the safety and such. But in terms of marketing, when I think of marketing, I think of like trying to generate more demand or advertise, and I don't think that's needed at all. Yeah. Next
Yeah.
question. From Hoops How on Twitter, thoughts on stock buybacks. Could Tesla become a cash cow, much like Apple, and use excess cash to buy back shares? That's a good question. We've talked about this in the past, the dividend potential. I mean, I think Tesla will become a cash cow, just a matter of time. What they do with that cash remains to be seen. How do they have new incredible things they're going to develop beyond the Tesla bot? I don't know. I can't even dream of what Elon's got in mind potentially for beyond the Tesla bot. I'm sure he has something in his mind, but I have no idea what that is. But at some point, they're gonna just produce so much cash they're not gonna know what to do with it. You can only deploy so much cash efficiently at a time. I think Elon's referenced that in the past. Like you can't build 10 gigafactories at once. 2 at once is enough. So they can build maybe another 2 at once after this or something. But to build like 5 gigafactories at once is just going to dilute their efficiency or allocation of capital efficiency. So, what do you think, Matt?
Yeah, I agree. And you could imagine a scenario where they've got just kind of crazy operating cash flow, but then it may make sense for them to just own all of their production. So like own a robotaxi fleet themselves. So that would be incredibly capital intensive to do that. You're essentially paying for the full cost of a 7-year asset or so up front and getting that paid back over time. So if they were to start doing that and building that out at scale, then that would presumably be a much higher ROI use of capital than stock buybacks. So in my mind, it's probably not in the next 5 years, probably not even in the next 10 years that'll happen. But at some point, kind of the useful plowback of cash flow back into the business, there will just be so much cash flow that there won't be enough investment opportunities internally to do that, and then you'll have things like, I think, dividends or buybacks. And I don't have a strong preference between the two.
Yeah, me neither. We'll see when that time comes. Lemonade is back at the IPO price. Hold your nose and buy leap call options. Yeah, I mean, Lemonade, we love Lemonade still. We think it's very attractive. It feels lonely. Sometimes it's the best time to get into these things if it's going to turn out to be good, obviously. We're talking 3 billion market cap company. So it's practically a micro cap stock at this point. I think officially under 1 billion is micro cap, but in today's world, 3 billion feels like a micro cap company. And we think the potential for Lemonade is huge, sort of like a binary outcome. Either it's going to, dwindle over time and become, acquired for pennies on the dollar or go bankrupt one day or whatever. That's like the worst case. Or it's going to disrupt the insurance industry to some degree, at least, maybe to a large degree. But even if it disrupts the insurance industry to some degree, we think it's a 10x return. But we think that binary outcome could take 3 to 5 years to really start playing out in the stock price. And so for that reason, the call options are risky because they only go 2 years out. So it's very possible in 2 years the stock is still kind of in this range of wherever it is now, possibly. So the call options they're risky. You could certainly have a payoff sooner or later. It would have a nice payoff if it worked out in the upwards direction. But just like Tesla, from 2014 to 2018 or 19, I remember very vividly. I was buying lots of long-term call options in Tesla all that time, but I was very careful. It's very tricky to get out of my Tesla call options at the right time where I didn't lose all of it, and then redeploy for longer dated call options. And I was losing money slowly, over that 5-year window. Eventually I had a big payoff, but if I wasn't so careful or lucky with the timing of rolling some of my call options, I could have lost a lot more, or all of my call option, investment money. So yeah, playing the call options is difficult for something that you think could take 5 years to play out. So I don't know. What do you think, Matt?
Yeah, I completely agree with you. I mean, I think leaps today could end up worthless, but if you keep layering these in over the next 5 or 10 years, maybe not 10 years, but over the next, 5+ years, my sense is there's a good chance that binary outcome that we talk about could result in a very large payoff for one of those. But it's just very hard to know when that will hit.
Yeah. Yeah. And then you have the binary outcome is not necessarily like a 50-50 coin flip, right? You got to place your own probability on those two outcomes. Do you think it's a 80% chance that it's going to disrupt the insurance industry and 20% chance it goes, you got to think probabilistically, and then put your own probability weighting on those two potential outcomes, in my opinion. Anyway, next question. From Hey Arnie 88 on Twitter, have you guys looked at Lemonade and the marketing finances? Meet Kevin also did a video on this a few days ago. Maybe we'll make this. Maybe we can do one more question after this, Alex, but we'll do this one first. Or have you guys looked? What do you think? I know Dave, Lee, and I chatted briefly about it on Sunday night. And Meet Kevin did a video on this. I didn't see that Meet Kevin video. Did you happen to see that by any chance, Matt?
No, I saw Dave's comments, and I think Dave's comment, if I recall correctly, was a lot on kind of the retention of customers. And I think they addressed that a little bit in the call, but I'm not on the Q3 call, and I'm not fully confident with kind of my interpretation of the numbers right now. But management's representation, at least, was essentially that, in terms of the retention, they had a lot of churn in between different categories, and the way that the metrics are kind of developed, it's on like a dollar of in-force premium basis that's retained. And so as you add, let's say, a pet insurance customer who then maybe 4 months later becomes like a home insurance customer, then the math of that whole thing changes, and kind of the reset date of that changes, which can drive the metrics up or down in ways that aren't necessarily indicative of kind of the core underlying performance of these products. So they were saying on the call that was kind of, it was more kind of like the movement of those categories making the math look strange, and not any sort of reflection on kind of like the core underlying fundamentals. Now I want to watch that Meet Kevin video and do my own kind of deep dive on it to make sure, to see if I agree with that assessment or not. But to me, that kind of makes sense, like what it could be. The other thing that, was the marketing. So I think here, that was another question that came up, and they were talking about how they saw, I think it was a 26% year-over-year decline in marketing efficiency, as they measured by the change in in-force premium driven by advertising spend. So what they said again in the Q3 call was that was sort of an industry-wide event, which I'm not sure why marketing efficiency would decrease so drastically industry-wide. That doesn't really make sense to me. So I want to dive into that a little bit more. But their position was they actually had less of an impact. They saw less of an impact at Lemonade than other players in the industry did. So yeah, those are two questions I definitely want to dive into a little bit more, since people I respect have raised them. But yeah, I guess more to come on that.
Yeah. So I guess the last question I'm reading from here is interesting. Is what's more likely to? This is from JEKM. What's more likely to happen? An Apple car or an Apple operating system to be licensed to existing auto companies. I think, Apple, there's too big, for people to say Apple is going to come into the game and disrupt Tesla's market share. There's two big ifs baked into that potential. And the first if is Apple, if and when Apple does release and produce a car, or produce and release a car, within some time frame, with that, and I think there's probably a very low chance they do, in my opinion. Um, and if and when they do, the second if is, if they do, is it going to be better, or is it going to be at least competitive to the Tesla product at that time? And that if is another very low probability event, in my opinion. So for those two things to happen, I think is very, compoundingly low. And I think Apple decision makers, whether it's Tim Cook or whoever, kind of realize that. And for that reason, they're more likely to go the operating system route, because that's sort of like, instead of trying to produce their own car from the ground up and do everything Tesla's done better, which is a hard feat. I think they're going to try to just be the software cow of Ford or GM or all the other legacy automakers. They'll try to put partnerships together. I'm not sure how smooth that's going to go, but I think that's what they're going to try. It's a much lower risk if they fail on that versus dedicating tens of billions or maybe 100 billion or more, eventually, of resources to full-fledged car production, mass production, and failing at that, which would totally destroy the brand going forward. If they tried to create like an operating system for certain car manufacturers that didn't fly, their brand doesn't get tarnished too much. I think they still have their brand. But if they try to come out with an Apple car and it just falls on its face and, it's not that good, or, it's not as good, that would really be the end of Apple as we know it, I think. What do you think, Matt?
Yeah, I agree. I mean, I think the thing that makes most sense for Apple to do is to kind of focus on the operating system. I mean, even in the current market, there's a lot of folks who love Apple CarPlay, and they're just like appalled that Tesla doesn't have Apple CarPlay on their cars. I think most Tesla owners will tell you that's not a big deal, but for a lot of people, that is like a convenience feature that they really like. And so I think they'll continue to kind of use those brand relationships. There was also the rumor a while ago that Apple might be partnering with another OEM, like I think Kia was named like a year ago. So I think you could see
Hyundai or something.
Yeah, I think you could see some sort of like kind of co-branded vehicle or something like that, where the OEM does all like the car stuff, and then Apple like designs the interior or something like that. To me, that can make sense. I mean, like you actually saw this. I don't know if you remember or ever saw those like Eddie Bauer Ford Expeditions that were a thing for a while. Like I think it was like back in the 90s or the 2000s.
No, I didn't see that. No.
Yeah, there were like these cars that had like the Eddie Bauer logo on them, and they had like some special trim for some reason. I always thought that was strange, but you could see some scenario like that, and
some experiment.
Yeah, maybe they'll call it the IKEA if it comes out. It's partnered with.
That's cool.
So yeah, I don't know, but I think it's just I agree with you. There's too much execution risk, and the bigger thing is there's too much brand risk for Apple if they tackle something like this all in house and it falls flat. I just think that'd be terrible to their core business. So I don't think they'll do that, and they're so far behind. I just don't see it.
Yeah, I agree.
Like maybe I don't know. The only thing I could see is like maybe they buy one of these companies. I don't know, like Lucid or something like that down the road, and just pick up their technology and fund it for a while. Like I could maybe see that, because they could do an acquisition like that very easily, even at that kind of high value.
If those values fall like very low, maybe. But yeah, it seems like that ship might have sailed. That their chance was 10 years ago to develop this, and now they're 10 years too late to start developing it. They're not going to move as fast as Tesla can. They're huge business. Apple's like one of the biggest companies. It is the biggest company in the world by market cap. It probably has more employees. One of the most. It's such a huge company. It can't be very efficient. It's got to be a huge bureaucracy with committees upon committees by now. So I just imagine how lost that decision-making tree probably gets. So anyway, We'll leave it at that. And yeah, we'll keep doing this every week, hopefully. And any issues with sound or anything, please leave us feedback. And hope you guys got something out of it. We love getting the questions, and the questions are great. We get to explore ideas we haven't thought of a lot of times, and open source, just chat about it. And we'll keep putting content. We got some interesting interviews coming out on our channel soon. And we'll put a video together about our charitable giving strategy shortly. So hopefully all goes well, and we'll see you guys next time.